Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today to whap and tap on your head with another ADH wealth solution. Today's article is from wealthmanagement.com entitled Life Insurance as an Investment for Retirement, written by Charles Radner, January 10th, 2024. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. Sold as a tax play, it's more about the policy and the agent. Though hardly a new concept, the use of cash value life insurance as a tax-advantaged investment for retirement seems to be enjoying a marketing renaissance these days. An example of strategy. At a very high level, the strategy involves just a few steps and favorable provisions of the tax law. Here, in time-lapsed, technically compressed prose is just one variation on the theme of how the strategy could unfold. Charlie buys a policy that, it should go without saying but won't, qualifies as life insurance for federal tax purposes and isn't a modified endowment contract. He pays premiums for a certain number of years, let's assume 10. He puts away his checkbook and lets the policy's cash value grow for another few years. Basically, he's allowing the policy to season in anticipation of the steps to come. The policy's cash value grows on a tax-deferred basis as long as it remains in the policy. When he and the policy are ready, which presumably is at his retirement, Charlie begins to take cash from the policy by way of a series of, at least for now, 10 annual withdrawals, or partial surrenders, to the extent of his basis in the policy, followed by loans. Charlie won't pay any interest on the loans. The interest will accrue and be added to the loan, becoming an ever larger mortgage on the policy. In fact, the columns in the illustration show the increasing cumulative loan and the annual interest accrued really catch Charlie's attention. The withdrawals and loans are both tax-free under current law. But how much money can he take every year? This is where the plot thickens and the number of illustrations proliferates. At retirement, Charlie has shown that he can take X amount from the policy yearly for each of the 10 years. However, the X figure is the maximum amount of cash that, under certain assumptions, he can take from the policy over those 10 years and still leave enough cash value in the policy to support some death benefit, net of the loan, for the rest of his life without having to put any more cash into the policy. The agent will run a new projection of that figure every year under the then current assumptions. The yearly figure could be more or less than the prior years, depending on how the policy performed over the last year and what's assumed for the remaining years of payments. If Charlie takes cash beyond the reprojected figure and or policy performance takes a decided turn for the worse, the carrier could eventually tell him that the policy will lapse if he doesn't put more cash into it. If the mortgage policy lapses before he does, Charlie's likely to have a lot of taxable income. True, the policy may offer a mechanism to avoid a lapse, but that's beyond the scope of this brief summary. If Charlie dies when the policy is in force, the beneficiary receives the remaining death benefit income tax-free. Blend of art and science. This particular application of life insurance is among the most interesting and challenging blend of art and science that I see today. Compared to the use of life insurance in estate planning, this application requires far more technical sophistication and service on the part of the agent, and far more attention on the part of the prospect and then policyholder. Unfortunately, that's not a message one would glean from many of the marketing pieces I see promoting the strategy. The application is also interesting and challenging because it lies along the fault line of tectonic forces of suitability, best interest, product complexity, product complexity, and policyholder service that I discussed in life insurance policy themes for 2023 and a life insurance agent's to-do list for 2024. In fact, I'd say this strategy is at the epicenter of those forces. Here again, you wouldn't know this from the marketing pieces. The reality check. Not every individual who considers life insurance as an investment will buy. It's been my experience that if a prospect kicks the tires and walks away, they did so for one or more of several reasons. One, they didn't want to go through underwriting. They say even simplified underwriting is underwriting done on someone else. Or, can we just have a paramed drive by the house so I can wave? Second, they went through underwriting but not well enough to allow for a well-priced policy. They concluded that all things and risks considered, the strategy is just too complicated, a mousetrap versus a traditional investment. They realized that if they become unhappy with the carrier or product, especially in the later years when the policy is heavily mortgaged or they're no longer insurable, they may not have a satisfactory set of options to address the problem. They realized that they're too old for the strategy to make sense. That is, it'll take too many years for the policy to season. A money manager talked them out of it, or a policy designed and priced attractively enough for a well-coached prospect to buy was not attractive enough for the agent to sell, so they both walked away. A collaborative process. With that as a background, let's consider how a highly skilled agent, like me, your boy, your social media insurance broker, can collaborate with an engaged prospect and his advisors to set the stage for a successful use of this strategy. Our Charlie is a healthy 45-year-old executive. He's been contacted by an agent who was referred by a colleague who recently implemented the same strategy. Charlie has an open mind about talking with the agent, especially because, fortuitously, he's been thinking about supplementing his group term insurance at work with some permanent individual coverage. Charlie's conferred with his tax and investment advisors, who have a few mutual clients, explore the strategy. Some took the plunge, some took a pass. Meanwhile, the advisors looked at the agent's credentials and background, and from what they can see, he's fortunate to be able to work with her. They also gave him some suggestions for how to prepare for and participate in the meeting. We just sent you some articles by another guy named Charlie. Send them to the agent and tell her that you read them and will base a lot of your questions on what was discussed in those articles. Pause, ladies and gentlemen. So you really want to listen to agents like me who are reading articles like this to you, because I see all of these financial channels where people are like, stock options, Forex, futures, this play, that play. And they don't show you 1099s, which I'm not going to show you mine, but they also don't show you where they got their credentials or what they're reading to stay up on the latest trends in the market. A lot of agents don't even know this type of stuff exists because they don't read these types of things. Tell the agent to, let's get back to the article. Tell the agent to bypass the tax aspects of the strategy for now and get right into the discussion of life insurance product selection and design, carrier selection, plan implementation, and management. For what it's worth, these plans are typically marketed for the tax benefits, but succeed or fail because of product selection and design, policy performance, and policyholder service. Be prepared for a lot of questions. There's a lot she'll need to know to come up with sound and suitable recommendations. For example, the strategy can be implemented with a number of types of products, but some products have certain features and characteristics that might make them more suitable for your particular use of the strategy than others. No doubt, she has a well-tempered template for getting into these items. Pause, ladies and gentlemen. So I sit with so many people, and I'm going to do a video of what I call a fact finder, so you see when I'm asking you these questions, and people will be like, well, what does this have to do with life insurance? Well, ma'am, I'm asking you how much you have in savings and investments and retirements and how much your mortgage is, because the first aspect of life insurance is the death benefit, meaning that you're passing down life money to the next of kin or your heirs. So if you don't tell me you have a $300,000 mortgage and you're $500,000 in debt and you don't have any retirement, but you want a $100,000 death benefit, well, the average funeral, lavish one, is about $35,000, and then your debt is gonna eat up the rest of that. So you want your kids to have your house, which is $300,000. A $100,000 policy ain't gonna help you. So if you don't give me that information, I can't help you. Continuing. Don't be shy about asking questions about products, carriers, or whatever else. She'll appreciate your involvement in the process. Although we don't expect you to hear things like this, be skeptical if you hear, my company generally recommends this type of product for this strategy, or my clients always like this kind of product designed this way. Those would be early signs that the agent is asking you to see your issues in her terms. Encourage the agent to be expansive about her methodology, criteria, and metrics for policy selection. Design, premium funding, the expected timeline and methodology for tapping the policy for cash, and her program for monitoring the plan. This is important because policy selection and design to maximize accumulation and then distribution without causing plan failure is a highly technical area that calls for special knowledge and skills on the part of the agent. She'll reprise this part of the conversation when she shows you the spreadsheet and illustrations of the products that have made the cut and why they made it. Some products like Index Universal Life or Variable Universal Life allow you to have some degree of control over the investment of the cash value. Ask her what assistance and guidance she would provide you in this aspect of the transaction. Also, ask her how she generally approaches investment of the cash value in these products over the full life cycle of the plan, meaning in the accumulation phase and then in the distribution phase. Study the illustrations. Pay special attention to the assumptions made in those illustrations and how things can change with just a tweak of a given assumption. Challenge the real-time benefit of any rider that adds additional cost to the policy. Understand the choice, functionality, and risk profiles of the mechanisms for taking cash from the policy, especially loans. Encourage the agent to delve fully and candidly into what, when, and why something can go wrong, how she'll design the policy to at least mitigate those risks, and how she'll monitor things as a part of a preventative maintenance program. Taking each such downside occurrence one at a time. Ask her what can be done about it, especially if it occurs at a time when the policy is heavily mortgaged and or you're no longer insurable. You'd better know about all this up front because options for dealing with a heavily mortgaged policy can range from unpleasant to unmentionable. By the way, assure her that you're not looking for her to guarantee anything. Otherwise, she'll never return your call. Other than she'll return your calls. You'll want to see the carrier's guide for any product she shows you, as well as third-party corroboration of the merits of any recommended product and its fitness for use in the strategy. Same goes for the carrier. She'll know what you mean. Here's our last suggestion, meaning the last one we'll make before we think of some others. Let's get together after your meeting with the agent so we talk it over and help you make an informed decision whether to pursue the plan. Of course, you may want to buy some insurance just for the insurance, in which case she'll take you through a different type of analysis. When Charlie sat down with the agent, he went through the key items on the list from the advisors. She smiled. Apparently, you've seen one of my presentation binders. And by the way, those articles, we've discussed all of them in my study group. Let's get started. So that's going to be it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.